Well, good morning, everybody. Hope you had a great Easter, and welcome to the Locke in Your Success Trade and Market Update for April 21st, 2014. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And please note that we do use hypothetical and simulated trades that are believed to be as accurately represented as possible. However, there are sometimes differences between live and simulated results. Just a little bit of quick news here is that the M21 program has been or is available from SMB. It is in pre-launch mode right now, and we are offering the actual launch prices, which is going to be $895 for the program. Discounted $100 from $995. If you're an Options Tribe member, then you can get, I believe, another 5% off of that. So it is available. It's available possibly for a limited time. We're not sure how many we're going to put out there before the actual launch, but you know, if you come on in, you can go ahead and get that if you'd like. All right, and going forward with that, if you're watching this on YouTube, come on over and visit our website, check out our programs, M3, Bearish Butterfly, ROCK, now the M21, group coaching, and trading triangle program. Join our mailing list to get the free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar at lockeinyoursuccess.com. I've included here on this page the link to go directly to the M21 purchase if anybody would like to do that. I'll also list it on the blog so you can actually just click it and link it through once everything gets posted later this afternoon, and I'll probably list it on YouTube as well. And coming up, we're going to actually change the format of what's coming up, so we have some new things in the pipeline actually that may differ a little bit from here. Still planning on doing the SSS trading series probably in September, but I have some other stuff going on too that's going to be really cool. All right, let's take a look at the markets. If you remember last week, we were saying that the Russell was probably going to bounce probably to the 1150 area, or as high as the 1150 area, possibly all the way to the backside of this trend line. So this move really shouldn't be a surprise to anybody. It's normal moving a breakdown to come back and retest our former support area. And from here, if I'm only looking at the Russell, and I'll show you why my confidence level might be shifting in this a little bit, but if we're only looking at the Russell, this looks like a classic breakdown where we're going to come back and break down to the 1075 area. I do think that's probably going to happen. We're probably going to retest these lows, and we're probably going to stay in a relatively sideways range, as we've been saying since, oh gosh, I don't know, way back here in February, which we've done that. However, it's a very wide sideways range, which can be a bit of a hassle. So, timing the market a little bit would be helpful here with the trades if you can do it, because this is a pretty big range, about 150 points probably almost. So that's the story in the Russell. We're kind of looking like we're going to break down and hold into a sideways range. In contrast to that, we have the SPX. And I would have expected the SPX it came down to this, about 1810 area here. I would have expected it to bounce back to its former support level, which is about 1840. And then probably continue down and complete the pattern. This is like a little topping pattern, and this really should have broken down to the 1775 area. Now, since that didn't happen and we broke back up in the range, that puts this index in the bullish category. So, what's likely to happen here? Well, what's most likely to happen is we're going to come up and test the former high, either the former highs up here, which are up near 1900, or more likely down a little bit lower than that, about 1885 or so. So I expect the markets would want to push a little bit higher here. That being the case, when you come back to the Russell, if that pushes a little higher, it may push this into the backside of this trend line, maybe slightly higher than we expected, moving 20-day moving average here. We'll see. we'll see how that goes. But that's we have a little bit of conflict with that. If you look at the Dow for confirmation, the Dow is also fairly bullish. This held a weekly trend line and bounced fairly hard off of it. And like I said, I wouldn't take this too seriously. But if we do start breaking to new highs, that's probably going to drag the whole market up, and that will change my outlook on the Russell. So the Dow looks like it's going to want to push and at least test its old highs. When that happens, the SPX will probably be near its old highs, and depending on where the Russell and the NASDAQ are at that point is going to give us a further indication of where things are going. But I'm looking for, if you see a breakout here, I would go bullish on the NASDAQ, and I'm talking not an intraday, but something that holds, especially a weekly close. I'd be looking for everything to start to drag higher. As of right now, we're still getting conflicting information, so I'm still in the sideways mode. If we look at the NASDAQ, this is bearish, a little bit even more bearish than the Russell. This bounce isn't quite as high. We didn't come up to our resistance area yet. Looks like it has a little higher to go. And the NASDAQ looks like it is in breakdown mode also. So we have the NASDAQ that's looking like it's in breakdown mode. We have the Russell that looks like it's breaking down. And we have the SPX and the Dow that look like they want to go higher. Usually when you get this, you get confusion in the market and it runs sideways. So that's what we're pretty much hoping for. That's what I'm going to make for a call for now, at least for the next week. And what I'm looking for to change my opinion, a breakdown on the NASDAQ under the support level, I would say is significant. And by a breakdown, I don't mean intraday. I mean, end of day and certainly end of week under that would be significant, and would be at least coming down. It'll probably take us down to this red line down here at, let's see, about 3250 or so, 3200. If that's the case, then that's going to pull the SPX down. Everything's going to come down with it. If the Dow breaks higher, that's going to tend to pull everything up with it. So those are what we're watching for future market moves. Now, now let's take a look at our positions here. I had April was expiration week, so let's take a look at how it's going to be results week for us. Let's go to our April V Condor. And we'll start showing you how stuff closed down last week. Run as a back trader. The V Condor didn't have any adjustments and essentially expired at a profit of approximately $1,700, $1,750. Let's take a look at what that line was here. So here we were Thursday, which we know would actually, I should probably go back to Wednesday, but because that's when we actually expired, or that was the last trading day. So back to Wednesday, essentially looks the same way, right? We have a 1753 profit at expiration, and that's pretty much what happened here. Everything expired on the money. There was no commissions, just expired as planned. The Bearish Butterfly for April had been closed, oh gosh, weeks ago at a decent profit, and we'll show you the results to that when we go over those. The April M3 was closed not last week, but the week before. And the only other thing we had over for April was a ROCK trade. So let's go back to Monday morning. So as of 10 o'clock Monday morning, on the April ROCK trade, remember this was pretty much play out as an M3 for the whole month here, except for right at the end here we moved in more into a condor type of thing for expiration. And here is the position. We were up about 965. We were sitting in a position like this on Monday. And at this point, we're breaking even for the month. It's been a relatively difficult month, and we've had some decent-sized price movements. So all I'm looking for here is 5 to 10% profit and to exit. So I didn't want to go into the gyrations of the whole week. I'm pretty sure we talked about that last week, basically saying that if the market starts to act up, we're just going to kind of get out of this thing. So that's what we look like on the morning on Monday. by the afternoon, if you go to 1500, this thing was up, well, about $3,500. We're near the top of the tent. I needed to decide if I was going to try to adjust this thing again or what I wanted to do. So I just decided to exit it. 3,500 for a month like this is perfectly fine, and I decided to take it. So this trade was closed out by the end of the day on Monday, and with no adjustments. And this ended up being a gain of about 34. But is that right? Let me see here. I don't know why I have unrealized gains in that darn thing. Make sure I tagged everything off here. Yep, I have everything. There might be something else in the account ahead of this. But as far as that trade goes, our combined gain loss is $34.90. So happy with that for the type of month that we had. And like I said, when we do a ROCK trade, our profit target's generally going to be about 20%. When we enter as an M3 and we never switch over, it cuts down to 10. You know, I took well over 5. I'm happy with that, like I said, on a month like this. So that was all the April trades that we had on. For May, we have a May V Condor, which we'll quickly take a look at that. Which is here. As of Monday, this was down about 13.79. Back this out. And we were looking at something like this. We had a maximum delta of positive 50, and we're only at 42. We pretty much were up the whole week from here. So by Thursday afternoon, this position here came in and is almost at break even now. We're about down about $100, and we're kind of looking like this. Now, if the market does what we think it's going to do, and it's going to come back down, it's going to be kind of a pain in the neck month for this. But as of right now, everything's looking really fine. If the market shoots up and decides to break higher, then we can start to raise this V up so that we'll make some sort of a profit. And again, this is going to be kind of a month like April, and you kind of get that in a May V Condor where you're taking relatively small profits in a downtrend. But, you know, the trade usually works out okay. So this is our current May V Condor position. Still have our shorts at 1290, and like I said, we ended up buying back one of these 1060s because the market came down too far on us last week. Let's see, we have our May Bearish Butterfly, and this trade by guidelines would have had no adjustments, and therefore it did not. We're just sitting here in the butterflies at 1130. Positions up about $5,800. We are coming into 21 days to expiration. Therefore, if the market settles back and the marble gets on top of the hill, as they say, and we get too far to the downside on this, I'll probably just close this because we know 21 days to expiration, we would close this at $5,000. If we shoot back here, more than likely, with the time decay, we're probably going to be up $8,000, $9,000, maybe even $10,000. Probably just close that out and move on because we're going to be opening June very shortly. So I'm happy, very happy if I can get $10,000 out of 1/3 of a Bearish Butterfly. And it looks like if we come down now, we're probably going to get fairly close to that, as long as it's a reasonably slow down move. And that is that. What else we got going on for May here? May M3 we have, which is currently sitting in this position. I do not believe we had any adjustments in the May M3. Let me just look here. No, I'm sorry, this is the wrong M3. Let's do a website M3. So the May website M3, yeah, delta's slightly high. We are negative 53 outside the tent. We usually like to hold around negative 50, but we don't have any real issues here. If it takes off, we lose some profit, not that big a deal. If it draws back a little bit, then we'll be doing quite fine. So this trade is doing fine. and had no adjustments. And last but not least, I have two positions that we entered on Thursday. One was the May ROCK trade, and the May ROCK trade is entered because of the higher volatility and range. We did our entry test and entered this again as an M3 this month. I entered it as 1100 short strike butterflies with 10, 1100, 1110 verticals, and added a call here at 86 delta to bring us to just slightly negative delta, and this is what our position looks like here. So a really nice looking entry for this. And we also entered the June V condor because it was time. So that would be here. We entered with shorts at 1010, which was right around 10 delta at the time, and 1240, which was right around 10 delta at the time. We have our straddle at 1130, and this is what our position looks like here. So this is pretty much break even as we just entered it, and this should be able to handle the market move down to the expected 1075 area fairly easily without too much of an issue here. And of course, if we go sideways or move up or down, it should handle a fairly big range. So that is looking good as well. And that is all the positions that we have. Let's take a look at how we've been doing for the year. And with our results update here, we pulled a 28.6% profit for the April Bearish Butterfly, which brings us for the year of 43.7%, which is our best performing trade for the year so far. And like I said, we had this loss in March, and that was a completely unavoidable loss had we not, had we taken our precautions here with this. We could have been a lot more for the month, but I'm perfectly happy with the results with the guidelines version. The M3 pulled about 4.4% for the month and has a fourth win for the year, and it's up about 23.7. That's pretty much normal performance for an M3. So, we expect this to turn about 60% or so in a year, and if we have a couple more months just kind of consistently with what we've had here, we should be up about 30, so that's pretty good. ROCK trade, we've had our fourth win in a row also, up about 40.7% for the year, so that's pretty good. And the V trade is, we has had 3 wins, 1 loss for the year, and is up about 12.2% for the year, and a 3.5% gain for last month. So the ROCK trade, the V trade tends to struggle a little bit in volatility. The Bearish Butterfly tends to excel in volatility. The M3 does well in volatility. The ROCK can go either way. If it's positioned as an M3 and entered properly, then it usually does fairly, usually a little bit better than an M3, but and that's pretty much in line. So that's everything as far as our results. So let's turn our attention to some questions here. Oh, well, welcome back, Ed. Welcome back to the trading world. Glad to see you back trading. That's awesome. Let's see. Ray has a question. Can I please share a little more about my group training or other ways to stay in the conversation with you? Yeah, so we do have offered through SMB group mentoring, and that's it's every first and third Thursday of the week, and we have it at 5:30 p.m. Eastern, and the sessions are recorded, and they're archived. So if you join group mentoring, you can come in, and there's, I don't know, a couple of years now or a year and a half of those meetings, and they're very, very educational. It's worth it to go in there and just to review the meetings. And it's a lot less expensive than coming in and talking to me one-on-one. So the meetings, like I said, they are recorded, and you can go through things like that. The cost is going to be variable, and I would go on you can go on my website and just kind of click through to the group coaching, and you can kind of find out what the costs are. It varies depending on what you own for programs. All right, Any thoughts on the June Bearish Butterfly this week? Yes, it's entry time on Friday for the June Bearish Butterfly. If we look at our charts, I mean, I kind of like today's entry day because we're up a little bit. I would be cautious to enter by guidelines, and we're going to enter by guidelines on anyway, because that's what we're doing with the guidelines trade on at 56 days. But if we were down at the 1075 level on Friday, that's kind of a risky, or anywhere below that's kind of a risky area to enter this, because if we get a decent bounce or even just a regular move and we're right and we stay in the sideways range from 1075 to 1225, we have a 150-point bounce there, and that could take you out. So I'd be a little cautious if we're down here. I don't mind so much up here, and we take the run to 1225. That's going to be a tough run, but it's going to be manageable with these delta skews and volatility levels. It's going to be a little bit tougher if we're down here at 1075. You might not make the range. So, and certainly if we have any sort of an up push into the 1150 plus area, then I'd be very interested in going in. And again, I think we talked about this last week. You might want to do some range extension techniques. If we happen to break higher, it's going to be an issue. I seriously doubt that, though. I don't think we're going any higher for a while in the Russell. Was the May M3 you entered on Friday? Was the M3 you entered on Friday? Okay. So I didn't enter an M3 on Friday. We entered that earlier. The M3 was entered, let's see, when was that entered? The position I entered on Friday was a, ROCK trade, entered as an M3. And it was a May expiration. So let me go to May. So this was a May expiration ROCK trade. And the M3 was actually entered, the website M3 was actually entered on 327. I do not have a June M3 on as of now. Am I going to include the M21 as part of a weekly review? I am currently not inclined to do that, and the reason is because that M21 trade revolves around the planning of the trade, and it's going to be, the actual trading mechanics are going to be different every month. I think it's just going to be confusing for people who don't have the program. And it's like I can do a bearish butterfly by guidelines, and if you have the program, you can follow it along exactly, or the M3 or the ROCK trade, and you can kind of see how we're supposed to be traded at. The M21 is a little bit different, and it's going to be confusing, so I'm going to tend not to do so. I may end up changing my mind, but as of right now, I'm not planning to. Okay, so what do I discuss in the meetings? Okay, so I'm assuming you're talking about group mentoring meetings. So if that's the case, the group mentoring, yeah, we discuss the nuances of all the systems, and we also discuss trades, some live trades if students have them, and so forth. The positions, like I said, if a student brings up a position, then we're certainly happy to talk about that. But I give lessons about what's going on in the market. We do technical analysis stuff. We're going to be adding M21 into there. So anything related to the M3 Bearish Butterfly, ROCK trades, and M21, and we will go over live trades as well there, so we can do that. In the group format, is it live participant audio or just Q&A asking text? Well, Curtis, what we do there is we are doing text Q&A, and the reason for that is because if we have 14 people talking at once, it doesn't work well. If somebody has a question, then yeah, we can come on, and I'll bring certainly a person on at a time, and we can talk back and forth if it's something that requires that. So yeah, it's going to be Q&A texting, but live audio is available for the times when that happens. Okay. Okay, if I can only choose one trade out of the M3 Rock Bearish Butterfly, which is the best suited for the current situation? So to repeat, if I can only choose one trade out of the three, M3 Rock or Bearish Butterfly, which one is best suited for the current situation? So this is exactly what the M21 is designed for, right? It's this design for coming in, analyzing the market conditions, and deciding exactly which one is the best. And most of the time, it's going to be one of the configurations within the ROCK system. And of course, the Bearish Butterfly and M3 are both configurations within the ROCK system. So I guess all the time it's going to be one of those configurations. So right now, looking at the market, M3 is the best choice or the safest choice to enter the market right now. So that's what I would do. And of course, if the market shot up to 1,200, it would be a different choice. But as of today, I would say the M3 is the safest choice to enter. And all right, V Condor entered on Friday. Ed, what do you want to? Well, Friday was the market was closed, so it was entered on Thursday. And what specifically are you asking about it? I can show it again. It's going to look like this. And this was entered actually on Thursday towards the end of the day. Oh, okay, number of days expiration. Typically, I'm going to enter this about 65 days. Essentially, it's going to be, I'm going to enter June when April expires. I'm going to enter July when May expires. Or if I happen to get out of it early, I may enter it early. Okay, so that is the, thank you for the question, Ed. How do we get more coaching on the M21? You would get more coaching simply by, we can either do, I have one-on-one coaching that covers all the material, and we can go over any specific questions on that, and we're also going to be doing some of that in the group sessions. And here we go. Will the M21 be covered in the Thursday group sessions? The answer is yes. We're going to be covering that, but we're also, you got to keep in mind, and I may end up separating that group. I'm trying to decide how to deal with that, because we have people from all skill levels. We have people who are kind of beginnerish Bearish Butterfly, to everyone, to people who are, and we're also going to be going over some M21 stuff, which is pretty advanced. So there will be some coverage of M21, the group sessions, yes. It's going to be mixed in with everything else, though, as well, which they all do kind of fit together anyway. All right, M21, how do I suggest you polish your skills? The best thing you could do is trade the M3 and ROCK systems and the Bearish Butterfly systems and really understand how they react to each of the varying market conditions. That would be very helpful. And then from there is also to start with technical analysis and charting. Read up on as much of that as you can, because that's going to be very helpful to you with the M21 system. Okay, so yes, the M21 course, Mary Ellen, is available at SMB. I'm going to be posting a link with the video recording, and if you want to email me directly, I can send you the link directly if you'd like to do that. But yes, it is available on SMB pre-launch right now. How many 1070 calls did you do for your May M3? I did one 1070 call for the May M3. Oh, May M3 website. This is just going to have one 1100 call. So the May M3 has a 1100 call. I think you're referring to the May ROCK trade that was entered as an M3. That has one 1070 call. The rest of the delta was straightened out with the verticals here at 1100 and 1110. So that's what I have. Okay. Ed, I must be able to react to market for M3. Well, you need to react to the market for everything, but as far as, are you talking about watching the market? So I think the question is, and you can correct me if I'm wrong, Ed, is essentially is how much do you have to watch the market with an M21 trade? And the question and the answer to that really is that it's up to you. I mean, you set up your trade according to how much you want to watch it. So if the M21 system basically gives you the flexibility. For example, if we were starting one of these today, do I want to be in a May trade? Do I want to be in a June trade? In other words, we would take a look at both of those. If one of your criteria for entering a trade is that you're not going to, or you don't want to sit there and watch the market, then you would be better off to go into a June trade. Right. You'd want to go into a June trade and plan on getting out of that trade early, and you'd never really have to monitor the market. If you went into a May expiration trade, then you'd have to be aware that, if you entered it as M3, you don't really have to watch the market a whole lot. But later in the trade, when you get closer to expiration, you're probably going to be in a position, or you'll probably plan to put yourself in a position where you will want to watch the market. So that would be the case. So you take that into consideration. So yeah, trading all must be taken into consideration. As a factor in each, right? Oh yeah, well yeah. All right. So Ed's not asking about monitoring. He's asking about you must be able to react to market changes. And the answer is yeah. When we enter an M21 trade, the market is going to be in a certain. You're going to have certain expectations for the market, and then you're going to have to outline. You'll outline what your expectations are for the coming month. And when you realize something changes, you should have something in your plan to change that and react to the market. So yeah, I think hopefully that answers your question. But yeah, I think best. Why don't you email me, and I'll try and answer that via email because it's we need more, or even a phone call. If you want to email me, set up a phone call, and we can talk about that. So that is, yeah, so Ed, why don't we go ahead and do that? Okay, you think you answered? All right. Well, if I answered the question, that's wonderful. It looks like one of them is, how do I know which method is appropriate to trade? And I'll just quickly, just mention that. And that is once you've traded the Bearish Butterfly, the ROCK, and the M3 trade, and you look at the market conditions and you look at the range the market's going to go back and forth, then you should be able to know which trade is most appropriate to trade. Because if for example, if we think the market's going to go up 100 points, the Bearish Butterfly wouldn't be appropriate to trade. Nor would a ROCK configuration for that matter. You'd want an M3 type of a configuration because that's the only one that's going to be able to handle that without drawing down a lot. If the market's extremely topped out, again, you probably want to go into some sort of a Bearish Butterfly type of thing. So that's the thing. And to be confident in your decision, again, it's going to be a matter of analyzing the market and doing that. It's going to be I'm sorry, I'm answering questions. I'm reading questions while I'm answering. It's going to be your confidence level is going to increase over time. So that's the biggest thing is just practicing it and time and time and time. There's certain things that you can't get from a book, and one of them is or even from a course sometimes, and one of them is complete confidence in certain things. You're just going to have to go out there. I mean, if you've traded the M3 for several years, you'll be confident in what market conditions that can handle. If you've traded Bearish Butterfly for several years, you'll be very confident in the market conditions that can handle. If you haven't done it, you're always going to have some questions. So, part of it's just going in there and just doing it, and just trade small, and you'll gain confidence that way, and then continue to go. All right, and then just a comment from Lewis says, thank you. Watched the first 8 M21 videos, starting my detailed view. Great stuff. Okay, look, thank you, Lewis. I appreciate that. All right, well, have a great day, everybody, and have a great week. We'll talk to you next week in the markets.